Right. Morning, everyone. Let's kick it off. Okay. Last night we got pounded again a little bit in the states. We had something that happened big overnight, and I got to be honest. I didn't realize the how significant it was going to be in terms of infect markets globally the way that it did. That was the lowering of the peg of the Chinese yuan versus the U.S. dollar, only 1.85%. But I think it was more about what the statement of what it meant, what was going to happen because of it going forward, and we really just saw a total unwind in certain assets yesterday. Certain shares getting absolutely decimated, commodity stocks getting hammered, luxury goods getting hammered, and there's across the board really just selling and risk aversion. And you're seeing it continue this morning. We saw yesterday as well. We saw West Texas Intermediate close down 5%. We had the lowest close in 6 years or something like that since 2009, if I'm not mistaken. It closed at 42.70. We had Apple, which was down about 5%. Google is actually kind of a savior for the Nasdaq on the session because of the restructuring that they're doing. It was up quite a lot on the day, but other than that, it was pretty much one of the only bright sparks of the day. Everything else really just getting cleaned out. In Asia overnight, we saw a follow through of that sell-off. The Aussie market down 1.5, Nikkei down 1.5, Hang Seng down about 2, and the rest of the market is down small. But I think that the damage is done there. We see the Australian dollar getting hammered as well. There's a couple countries that are extremely negatively affected by the revaluation in the yuan. That's really Brazil and Australia, I think, is the biggest ones. And you're seeing the Aussie dollar just getting pummeled on the back of that. I also read something that for every 1% devaluation in the yuan, it should bring commodity prices down by about 0.6% in US dollar terms. So that also obviously adding further fuel to the fire there. Nothing really to report out of Asia today. I think the damage is really done there yesterday. Chart of interest today, biggest losers from the China currency devaluations we talked about just a second ago. And you can see there, you can see Brazil, you can see, so what I read earlier actually had Australia and Brazil as the two biggest affected. I think that this is speaking more on a price parity comparison, showing whose imports lose the most competitiveness when as soon as, or exports lose the most competitiveness as soon as they revalue. So, but bottom line is, there's a lot of people who are obviously negatively affected by it. It does do China some good to an extent, but also does them some negative. There's some aspects that are very negative about that. You've got about well over $500 billion in U.S. denominated debt out with Chinese corporations. That obviously becomes more expensive to pay back. You've got lots of things that you can look at and reasons why this is not a positive. There's been a lot of capital flying out of China, especially from the wealthy, moving their money offshore over the past couple of years. This is only going to hurt that. It's going to accelerate that move, you got to think. So, all right, no corporate action to speak of today in terms of market data. We had Japanese PPI, which is better than expected, industrial production also better than expected, and tertiary index also better than expected. We had industrial production out of China. What do you know? It's a miss. Jobless claims change out of the UK, ILO unemployment rates. We've got mortgage apps in the States, and we've got crude oil inventories later this afternoon. All right, let's get into the maps. Okay. First thing we're going to look at this morning is we're going to look at the U.S. bond market. We're going to look at the 10-year Treasury, and you can see here just absolutely getting crunched over the last few sessions. We've dropped all the major levels of the last little while, and you can see here really, it's not a head and shoulder, but it's definitely a very It's a rounded kind of reversal that's happening here over a longer period of time, dropping major support there. I don't see any reason why we can't come back and test at least 2% on yields. I mean, from the target to the height of this pattern, it'd be showing lower than that. But you know, we were having this conversation in here this morning, and the reason why this is happening is because of the fact that China is deflating their currency. Then essentially their exports start to get cheaper to the rest of the world, essentially exporting deflation, because they are obviously the biggest global exporter. And with that deflationary effects that you have in the U.S., those along with the rest of the world, that obviously puts pressure on yields, and you can see that this trade started to unwind hard yesterday, and I wouldn't be surprised to see it accelerate further. You know, you got to think that the broad market was on the other side of this trade. Everyone expecting interest rate hikes, if not in September, at least by the end of the year out of the Fed. This could really throw a wrench in that. So I mean, this is just shaking up so many things, and once you get asset prices that are all moving really fast, you know, in different directions, then that usually spells trouble for equity markets. So just keep that in mind. We're going to look at West Texas Intermediate as well, which we talked about earlier, making its lowest close of the last 6 years. And you can see there it did make its lowest close, but you know, we are kind of right down there at support nonetheless. So we're going to need to see a punch through here because we're right down at the previous lows. We're going to need to see a punch through that 43 level and something convincing to the downside to make you think that this thing can actually fall further. Otherwise, this could actually be a bit of a double bottom in West Texas Intermediate. Right, next one we'll look at is Bright. So the Eiffel Tower has finally started to form the other side a little bit. What we'll look at here is on a 30-minute chart. You can see we had a nice head and shoulder set up that really dropped yesterday. You can see here opened up, you know, light volume, but really high. I mean, up around 150 early in the session. You can see us reversing down after that. We actually traded down to 141 and change. It's the lowest I really saw it trading in volume. We actually bounced into the close, but I think we'll probably come under pressure here again this morning. Bottom line is the height of the target here. We're really looking at about 14 bucks of downside from the 148 level, which would give us a target of 134. And to be totally honest, I really think that's not stretching it. I mean, I think this thing needs to correct at least down to those sort of levels. All right, and then with the last one we're going to finish up with here is Tencent, which as we speak is down 4.25% in Hong Kong. You can, what's that? Oh, really? You can see here that, sorry, apparently the chart's going off the edge of the screen. Dadgummit. Anyway, you can see Tencent here. Really trading right at what were recent closing lows, and the closing lows basically, you know, for the last 5 or 6 months. You know, if we close below this level, I think it's obviously a negative, but you got to keep in mind they've got earnings coming out today. They come out after the Hong Kong bell, probably somewhere between 12 and 1 o'clock our time. So just keep that in mind. So, you know, potential for massive moves. This thing has been hammered over, you know, the last little while. I wouldn't be surprised if we saw, you know, even with a slight miss out of Tencent, that you could see this thing trading up. I think the risk to reward is probably on the long side of the camp in terms of the stock that's traded at extreme multiples for a long time. All of a sudden, it's not looking very extreme at all. I think it only trades on a 26 times forward earnings multiple, which is definitely not that rich, especially for something that's growing as quickly as it is. So keep that in mind. Watch it for earnings today. It's obviously going to affect Naspers, which is going to drop some major support this morning because of it. That major support level right here around 1722, if I'm not mistaken. That level will definitely get breached this morning on the open. It got hammered yesterday into the close. I think we're going to test the 200-day moving average at least, which is right around 1693. So just keep that in mind today. This could be a real interesting opportunity, especially if numbers come out and they're relatively solid in Tencent. That's it for today, guys. Good luck out there.